After an extremely rocky start, World Liberty Financials seems to be bottoming out. It's one of the top performers today. The question is, does it now make sense to buy the potential recovery? Let's have a look at what's happening with the news. Let's have a look at what's happening with the on-chain data, who's buying and who's selling. And let's also have a look at the derivatives market, as in how much leverage is currently in the asset. Now, I've already discussed the fundamentals of the WFI token in a prior video. That video got quite a lot of support. There's 98% like to dislike ratio, and the video got 2.5 times more views than the average video on this channel. So feel free to check that out. The title is The World Liberty Finance Collapse. Now, WLFI's liquidity is bound to several blockchains. Here is the price relative to Solana. On the 4th of September, we bottomed, and since then, World Liberty was able to outperform Solana by 40%. Here's the same chart relative to Ethereum. The outperformance looks very similar, so 41%. We aren't that close to the resistance though, just yet. There's been a lot of discussion around the freezing of the assets of Justin Sun. Justin Sun, the founder of Tron, bought very early via the ICO into the World Liberty Financials project. He then gradually offloaded the token, taking profit, and the team didn't really like that and simply just froze the assets. Here's a Twitter post by Justin Sun asking the team to unlock the tokens again. And many people add their 2 cents to the discussion, right? If Justin Sun's tokens can just be locked like this without any real explanation, then any user could potentially lose access to their funds. There's also a problem with potential unlocks. Some people didn't get their allocation at all. But in this video, I don't want to talk about the drama that happens in the news. In this video, I want to talk about where the price might be going from here. Who's buying here? Who's selling here? Where is the liquidity, etc. Now, we still have quite a bit of on-chain activity of World Liberty Financial. We've got the Solana chain with 3 million of trading volume in this liquidity pool and another 4.8 million over here. We've got the Binance Smart Chain with 4.5 million of trading volume, and we've also got Ethereum. Here there's less trading volume, which is normal because gas fees on Ethereum are higher, but there's still 5 million worth of liquidity. Only on the Solana chain, WLFI is actually a trending token. It's the third largest trending token in terms of liquidity, so there's 9.1 million worth of liquidity. Only the Pump token and Coin are larger. Now let's have a look at the on-chain data. On Solana, we've got 27,000 holders. On Ethereum, we've got 75,000 holders. And on the Binance Smart Chain, we've only got 8,000 holders. Here are the numbers on Solana. On the left side, the number of retail investors. On the right side, the number of whale investors. The way we make this distinction is by looking at how many tokens are held in a particular wallet. So to be counted for the chart on the left, a wallet has to hold at least 5,000 WLFI tokens. So that's roughly $1,000 worth of the token. We can clearly see how the number of retail investors continues to grow. In the middle, the minimum holding is 50,000 tokens, so that's now $10,000 worth of the token. That cohort is also growing in numbers. On the right, we've got another 10x, so it's now $100,000 worth of the token. There's only 28 such wallets on the Solana chain, and that's not necessarily growing. Here, the same numbers on Ethereum. We do see a massive drop in the number of wallets, probably because of sales after the token unlock, but also because of movements to centralized exchanges. That decline has not changed for any wallet cohort. Let's zoom in a little bit to just see the last month. Again, the initial sell-off and the transfer to the centralized exchanges. This might be bottoming out somewhat now, which could explain the recovery of the token relative to Solana and Ethereum as well. Here are the same numbers on the Binance Smart Chain. Again, the tendency in the last few days is rather a stabilization of the overall investor base. Now, just because the number of investors isn't going down anymore doesn't necessarily mean that the price has to suddenly outperform. So what's actually causing the buying? We already see how the selling tends to slow down, but who's buying right now? Why is the price suddenly appreciating? I think the real source of purchases is now happening on the perpetual futures. Have a look at the trading volume on the spot market. At number one, we have Upbit with 183 million worth of spot trading volume. But compare this to the perpetual futures market. Here we had more than 2 billion with a B worth of trading volume in in the last 24 hours. So really the price discovery now happens on the bets on the price, the levered capital, the perpetual futures. This is really where then arbitrage bots balance out the price differences to the spot market. Really the perpetual futures are currently driving everything for World Liberty Financial. Now most of those perp traders are betting on rising prices, as in the longs have to pay the shorts to get more price exposure. Despite the somewhat rocky start, people are betting on a further recovery. And so this chart shows now where all of the purchases are coming from. The open interest on World Liberty Financial is going up over time. Open interest is a measure of how many bets are currently made on the price. And when most bets are betting on rising prices, of course, this has upward pressure on the spot market. And so as open interest goes up, as more and more people are speculating on rising prices, the spot price starts to follow as well. The issue, of course, with perpetual futures is that this kind of capital is short-term leverage. Most people that want to hold a token over many weeks and many years, they just buy on the spot market. Only people that want to get in and out of tokens quickly, they tend to prefer the perpetual futures market, because here transaction fees are smaller, but fees of holding the token long term are higher. The trading volume on the perps has stabilized, and of course with the price decline, it was mainly the longs that got liquidated. World Liberty Financial is now roughly 4 times the size of the Trump meme coin. And it's very likely that the meme coin will never flip the serious project. One could even make the case that some of the capital of the official Trump token moved into WLFI. And if you just compare the market cap of World Liberty Financial with other cryptocurrencies that are made in the USA, of course there's still quite a bit of upside potential. But really, hype is not enough anymore. Short term, we could see more leverage entering the token through the perps, but long term, we have to see an adoption of the USD1 stablecoin. The stablecoin that had been issued mainly with the help of Binance and that has been financed by the Abu Dhabi State Fund. World Liberty Financial in the end is a bet on the adoption of that stablecoin. Now, personally, I'm a friend of not just trying to ride the waves, not just trying to find the next altcoin that does a 10 or 100x. I'm a fan of trying to find strategies that perform independent of the market environment. Now, I want to share the latest results of the relative valuation trade strategy. So that's the community capital pool. This is where I trade for the premium members of this channel. It started 2 months ago, and annualized we are now at 72%. Now, besides just this positive performance where we go long Bitcoin, Ethereum and Solana, and we go short many other inflating altcoins, I'm especially proud about this because Bitcoin plus Ethereum plus Solana just went sideways during the same time period. So this is the performance while the market did nothing. And this, I believe, is where the real key for money making lies. It's not trying to ride the hype cycles or the attention waves. It's more about finding structural inefficiencies in a market and then set up strategies that take advantage of those inefficiencies. I've used this relative valuation trade approach already for quite a while, roughly 4 years. So yes, the community pool trading only started 2 months ago, but because I did the relative valuation trades with my own account, I outperformed just dollar cost averaging Bitcoin by quite a bit. So had I just dollar cost average into BTC, I would have gotten the performance here in this gray line, but instead I got the performance here in black. And so really the question is, if you still want to find the next 10x altcoin and then lose all funds in the process, or if it's maybe better to follow a strategy that tends to make money long term, independent of market conditions. This is what I'm trying to achieve here. Because let's think about this fundamentally. Why was Bitcoin invented in the first place? It was invented because of the money printer, right? Because fiat currency expands over time. There was the bank bailout where the banks got all of this capital injection at the expense of the average person. The purchasing power of US dollars went down. And most people underestimate how quickly the purchasing power is going down. This is USM2, it's the US money supply, and this grew in the last 66 years by 6.8% every single year. So compounded geometric average. This is the linear scale. On a logarithmic scale, this looks pretty much like a straight line. So it's 6.8%. It's that growth why Bitcoin exists. Because it's extremely hard to increase your income every single year by 6.8%. There are a few people that benefit from the system, from the devaluation of the currency. It's a massive hidden tax that concentrates capital further and further in the hands of a few. And so the global financial crisis is why Bitcoin was born, right? This is the S&P 500 that crashed by more than 50% in a very brief period. And the very first block, the Genesis block, had a reference to a New York Times article. Chancellor on brink of second bailout for banks. So that was the bank bailout in Germany. And so the idea of Bitcoin was always to be the hardest of the monies, right? A peer-to-peer system, completely independent of the evil banks. At the beginning, the inflation of Bitcoin was very high as well, but it was high just in order to attract adoption, which in the end, of course, was very successful. But now it's not high anymore, right? It's only at 0.8% per annum, and more Bitcoin every year gets lost than gets mined. So actually, Bitcoin is now a net shrinking asset in terms of circulating supply. It becomes more and more rare. Now, why am I talking about all of this? I'm talking about this because Bitcoin's intention was to be hard money. Bitcoin's intention was to escape the inflation. Now, for most altcoins, it's the exact opposite way. The token inflation of most altcoins is even worse than fiat currency. And that's why even versus fiat currency, most altcoins go down. But they especially go down versus Bitcoin long term. Here are a few random examples that I just took from this website, Tokenomics.ai. This is IOTA. It started at a token supply of 2.7 billion and is now at 3.6 billion. And here's IOTA relative to Bitcoin over time. Next example, here we've got Axie Infinity. Again, I just took something random from this website. I did not handpick those charts. Here's Axie Infinity. It started at 60 million and it's now at 266 million. This is much worse than how quickly fiat currency inflates. And here is Axie Infinity relative to Bitcoin. I'm not going through every single number now, just showing the general trend. This is Aptos, and here is the Aptos relative to Bitcoin chart. Here is Arbitrum, and here is ARB relative to Bitcoin. Here we've got ApeCoin, and here is Ape relative to Bitcoin. And again, those are not hand-picked examples. Most altcoins look exactly this way. And it's all because of token inflation. Whatever goes up constantly in supply, when the demand cannot catch up, tends to just go down in value. It's just the law of demand versus supply. This is how prices get discovered. It's economics 101. And so I'm taking advantage of this structural inefficiency in the crypto market. That's why I'm able to outperform Bitcoin. I'm not buying those assets. I am betting on falling prices of those assets, especially relative to Bitcoin, not just in US dollars. The strategy doesn't work. This is, by the way, the performance of the smaller altcoins in the last year. In the last year, Bitcoin doubled in price roughly. So there's only 3 out of 100 altcoins that did better than Bitcoin. 97 did worse. And this is no coincidence. And so we are constantly making money with this strategy. We are shorting various altcoins with high token inflation. Here are a few trades shared by the community members. I'm of course sharing my trades as well. You can simply just copy trade me. But the reason why most people never attempt to do this approach, to bet on falling prices of bad altcoins while simultaneously betting on rising prices of Bitcoin and Ethereum and Solana, the reason why most people don't do this is because they don't know how to set this up, or they are scared of the potential risk, because everybody says that betting on falling prices is so risky. But it's only risky if you don't know what you're doing. And so that's why I created dedicated tutorials on this. And it's actually not that complicated. You just have to watch 2 videos. It's this one over here, using perpetual futures, and it's this one over here, risk management with relative valuation bets. It's in total 1 hour of content. And after you've watched this and you've joined the community, I will share my favorite trade with you. My favorite trade is structured in the same manner. So we bet on rising prices of Bitcoin, Ethereum, and Solana, and we bet on falling prices of one particularly bad altcoin that continues to underperform extremely consistently. I'm so confident in that trade that this trade will make money in the next month, that in case when you open that trade that I will share with you once you join, in case you don't make money with that trade after 1 month, during the membership period. If that trade is not in the green, then I will simply refund the membership fee for you. You either make money with the trade or you get your money back. It's that simple. And so here is that fee. It's $125 per month. And again, if you don't make money with the first trade that I will share with you, you will get those $125 back. If you want to be part of the copy trading vault, so where you automatically get the execution of my trades, you don't have to manually copy trade. I still share every single trade I do. But if you don't want to manually execute all the trades yourself, you can become part of the copy trading system as well. Not right now, unfortunately. All deposits have already been closed until end of the year, but there will be a new copy trading pool at the beginning of next year, January of 2026. Access to that copy trading pool will be restricted to the annual members. So if you want to already sign up for that, you can do so. Everybody that signs up for the annual membership will get access to the copy trading vault, but you can simply start out with monthly and then switch to yearly later down the road. That's totally viable as well. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.